Good morning, traders. It is great to dive into this topic with you. Today we are looking at the covered put strategy, a sophisticated move for bearish or neutral markets, and identifying five high growth US stocks backed by strong fundamentals, government support, and smart acquisition. Part 1. The covered put strategy step by step. A covered put is the bearish twin of the covered call. It is used when you believe a stock will stay flat or drop slightly. Important warning: unlike a covered call, a covered put involves short selling stock which carriers theoretically unlimited risk if the stock price rockets upward. The step-by-step process: short the stock, you sell 100 shares of a stock you don't own borrowed from your broker. This brings cash into your account but creates an obligation to buy them back later. Sell the put, write the option. Simultaneously, you sell one out of the money. That means OTM. Put option for every 100 shares shorted. Collect the premium you receive on immediately cash payment. Premium for selling the put. This is your minimum profit cushion. Manage the outcome. If the stock falls below the strike price, you are assigned you buy the shares at the strike price to cover your short, keeping the premium plus the difference between your short sale price and the strike price. This is your maximum profit. If the stock stays flat, the put expires worthless. You keep the premium and still hold your short position. If the stock rises, you lost money in the shorter shares. The premium you collected only offers a small buffer. 42. 5 growth equity stocks in the USA 2026 outlook. These companies are selected for their triple threat profile: strong fundamentals plus government support plus strategic acquisition. One Micron technology, that means MU short form. The growth engine. Micron is a leader in memory, DRAM, NAND. The RAM or NAND, essential for AI. Government support, heavy beneficiary of the CHIPS Act, receiving billions in grants and tax credits to build domestic fabrications plants. Acquisitions: frequently acquire smaller tech firms to improve high bandwidth memory HBM efficiency. 2. Anti-quantum involves industries SII. The growth engine, America's largest military shipbuilder. Government support, essentially a government-backed monopoly. For nuclear aircraft carriers, their revenue is secured by multi-year Pentagon contracts. Acquisitions: they have aggressively acquired mission technologies firms, AI, and autonomous underwater drone companies to modernize their fleet. Three Kratos Defense and Security Solution. Company name short form KTOS. The growth engines a leader in unmanned aerial systems, that means drones and satellite communications, government support, benefiting from the US Air Force shift towards loyal wingman drones, low cost autonomous jets. Acquisitions consistently buys boutique engineering firms specializing in microwave electronics and turbine engines to stay ahead to rivals. Fourth one, Honeywell International, short form HON, the growth engine, adversified, a diversified giant moving heavily into megatrends like automation and aviation. Government support heavily involved in federal sustainable aviation fuel SAF initiatives and defense aerospace. Acquisitions in late 2024 to 2025. They completed major acquisitions in the aerospace sector like Carriers Global Access Solutions to dominate building automation and security. Fifth company is Microsoft MSFT, the growth engine, the undisputed king of the AI era through its partnership with OpenAI and Azure Cloud. Government support holds massive federal contracts like the JWCC cloud contract and is a key partner in national cyber security initiatives. Acquisitions, known for mega acquisitions, Activision, news that integrated deep tech into their ecosystem to ensure long-term moat. Since we have covered the what and the who, let's look at the how. If you want to see exactly how a covered put works with one of those growth stocks, I can run a hypothetically calculation for you. Will show you exactly where your minimum profit comes from and where the risk side. For example, we could look at Micron. That means MU. If you shorted the stocks today and sold a put option against it, the premium, you would see the immediate cash rent you collect. The break even, I can show you how much the stock can hurt you rise before you start losing money. The exit, I can explain how to close the trade if the stock drops as expected. Would you like me to run the numbers of a Micron MO covered put so you can see the math in action? Let's get into the practical numbers. Since Micron is a high growth stock currently benefiting from the CHIPS Act and AI demand, it is a perfect candidate to use as an example for a covered put calculation. Hypothetical covered put Micron. Current stock price, let's assume $110. The strategy, you believe the stock might pull back slightly or stay flat. Step 1. The setup, opening the trade, short the stock, you sell 100 shares of MU at $110 your account is created. That means $11,000. Sell the put. You sell one put option with a strike price $100. $100. Expiring in 30 days, collect the premium. Let's say the market pays you $3.00 per share. 300 calls to sell the options. Step 3. The math of your minimum profit. Your minimum profit in this specific scenario is the premium you collected, but it only stays a profit if the stock does not rise too far. Total premium received $300. Break-even price $113. Stock price plus premium. If the stock stays below 103, you are technically in a winning position because the $300 cash you collected covers the loss on the shorted shares. Step 3. The best case scenarios. Maximum profit. If Micron drops to $100 or below at expiration. Profit from short stock you sold at $110 and buy back via the put assignment at $100 profit equal $1,000. Profit from premium, you keep the $300. You were paid upfront. Total profit $1,300. Summary table performance at expiration. Stock expiration at expiry. Outcome profit or loss $120. Stock rose minus $700. Shortless of 1,000 minus. Stock price at expiry. Outcome profit or loss 9%. $300 premium. $113. Stock rose 2.7%. Break-even point $0. $110. Stock stayed flat. Plus $300. You keep the premium. $100 or less. Stock dropped 9% plus. Plus $1,300. The maximum profit. You will do it. Why this work for growth stock? Even if a company like Micron or Microsoft has great fundamentals and government support, the market often overheats. A covered put allows you to profit while waiting for the price to return to a more reasonable level. Please like, share, subscribe and comment. Now introduce one thing. Hand-picked excellence just for you. Discover our exclusive collection at Noble Store Shop. We have partnered with Amazon. They bring you top tier products with the convenience, the speed you trust. When you shop through our curated links, you support our work through a small commission from Amazon at no extra cost to you. It is a simple way to shop smart while supporting our community. Quality meets convenience. Click below to explore your next favorite find. Shop our Amazon favorite now. Thank you. Another 2.5 video is there. What is that? Your art will touch video.
The covered put options trading strategy is designed for investors who aim to generate income in stable or slightly bearish markets. This approach involves selling a put option while simultaneously holding a short position in the underlying stock. By collecting the premium from the sold put, investors can enhance their returns, provided the stock price remains above the option's strike price. The strategy is typically used when market conditions are expected to be steady, minimizing the risk of significant price declines. It offers a way to profit from both the short position and the option premium, but requires careful monitoring to manage potential losses if the stock moves unexpectedly. To execute a covered put strategy, begin by selecting a stock you believe will remain stable or decline only slightly in price. Next, establish a short position by selling shares of the chosen stock. Once this is done, sell a put option with a strike price at or below the current market value, which allows you to collect a premium. Throughout the trade, monitor the stock's price movement to assess risk and potential outcomes. If the stock stays above the strike price, the put option expires worthless, and you retain the premium. If it falls below, you may be required to buy back the stock at the strike price, impacting your overall profit or loss. 5 prominent U.S. growth stocks stand out for their robust fundamentals and strategic advantages. Palantir Technologies leverages AI-driven data analytics and has secured major government contracts, including a $10 billion deal with the U.S. Army. NVIDIA continues to dominate the AI and data center markets, with rapid revenue growth and upcoming innovations in its Blackwell architecture. Broadcom has strengthened its infrastructure software offerings through the acquisition of VMware, driving significant revenue expansion. Crystal Biotech focuses on genetic therapies for rare diseases, recently achieving FDA approval for a groundbreaking treatment and maintaining a strong pipeline. Expand Energy, following key mergers, has become the largest U.S. natural gas producer, planning substantial production increases backed by a multi-billion-dollar investment. These companies combine government support, strategic acquisitions, and innovation to pursue sustained profitability. The covered
And another video, another images there. Please like, subscribe and comment. Creators, Google Ads, subscribe and grow. Thanks friends. We will meet next video. Once again, thank you. Please visit our noble stores shop.